Welcome everyone. Today I want to talk to you about something. Uh, not something. I really want to talk to you guys about one of the strategies that I like the most, which is Fibonacci. Um, this is gonna be a very quick class. It's gonna take me about 10 minutes, so just bear with me. This class is gonna really take your trading to another level. It's something very simple, but most people don't really know how to use this tool when they're trading. So today I'm gonna show you how to incorporate the Fibonacci levels into your trading career. Okay, so let's dive into it. I'm going to use probably gold for this. I'm gonna use gold for this example, right? So the very first thing you need to understand is what's a Fibonacci level. Okay, so pretty much a Fibonacci level, it's a percentage where the trades will always go back to it, okay, or a place during a trade that price tends to come back and keep going on the same trend. Okay, normally these are specific numbers, which there are the ones that I use the most are 65.8, 55.9. I'm gonna put them over here so you can know. So this is a Fibonacci level, and this is pretty much the numbers that I use: 0.61.8, 0.559, 0.5, 0.786, and 0.382. Now, the lower the level, the quicker or the faster you're going to see a reaction in the market to the level. Now, the higher the level, the slowest that reaction is going to be in the market. So the higher the level, you could expect a longer consolidation period around that zone. Okay, now the lower the level, you could expect a very quick reaction, a very quick what we call continuation of the trend. So I'm gonna give you an example right now. So let's just say I'm looking at this trend right here. Okay, I'm looking at this very trend right here that happened, which we are in, which we have higher lows, and of course we have higher highs because we are in a high trend. We are in an uptrend right now, right? So let's just say that none of this happened from here to here, and I want to see in the market when this reaction is going to occur before it happens, right? So the very first thing that I need to see is that, okay, first I have this push to the upside, okay? I have these downtrends to the upside right here, which this is, I know for a fact, this is almost about 50%, okay, just by looking at it, right? But I'm already in the trend. I'm watching this trade, and I see how it goes up from here. I see that it goes up from here, and I see this entire upturn right here, right? I want to see when it's coming down. I want to see when it's supposed to start going up, right? And for that, I'm going to use the Fibonacci tool. How am I going to work this? If I'm looking at a trend that is going up, I'm going to place my Fibonacci the same way, from down to up, right? So exactly this way. So let's just say I take the Fibonacci retracement tool, and this is my point A, and this will be my point B. So my point A in the market is where the trend starts, right? Where the pullback, to the uptrend starts, and then where that pullback finish. Remember, guys, I have not, for this example, none of this has happened yet, right? So what I wanted to show you guys, that if you see right here, as this pullback goes up and it comes right down, it actually stops at 0.382. Remember when I said that the lowest the number on that trend, the lowest the percentage on that pullback, the quicker it goes up. As exactly as we see, it happens right here. As soon as it touches 38.2, it goes straight up all the way to the next level, right? Now, I'm gonna give you another example, right? And this example will be when we do almost a 50 to a higher percentage. So we could see a higher percentage probably around this zone right here. So let me show you right here, just so you could see. So let's just say I'm going to use I'm gonna use this example right here, okay? And you're gonna see how the price actually consolidates, right? So I'm seeing this pullback, right? I'm seeing this pullback to the top, right? So we have higher lows, right? And of course we have higher highs. And I want to see how this uptrend is going to continue, right? So okay, let's just say I took this trade came back down almost to the 50%. Now from here it went all the way up, right? Now I want to see how low it could go and when can I get into that trade. So I will do the same thing right here. I'll take my Fibonacci from point A to point B, okay? Point A to point B. Now, point A right here, and of course we have point B over here, okay? Now, if you see, the trade actually goes, it starts around here pretty much consolidating before it goes all the way down to almost, not quite, came all the way down to 78.6, but however, it did stay around the area of 0.618 and 0.559. Now, as soon as it touched this zone, it consolidated, boom, and then the price went up, right? Now, the same thing you're gonna see right here. And now we're gonna see it to the bottom. Now, as the price changes, right? The price changes from point A to point B right here, okay? And I wanna see taking into account this Fibonacci, right? Taking into account this Fibonacci, I could already tell just by looking at this that there is a market shift, right? So we have a market shift from point A to point B. Market was rolling up, right? You had an upturn right here. As soon as we got to this point of 33,200, market decided to drop, right? So now I'm looking at this and I want to see, based on the Fibonacci levels and also other stuff, I want to see when can I have a real pullback to the downside for a continuation of this trend that I started right here. For that, I could use the Fibonacci, right? So let's use the Fibonacci. Let's see what the Fibonacci tells us. So Fibonacci retracement, we're gonna go for, since we're looking for a downtrend right now, we're gonna up from top to bottom. Okay, so I'm gonna place it from top to bottom. I'm gonna place it right here, point A, and I'm gonna place it to point B right here, right? Point A to point B. You guys could see right here, it stops twice, not once, but twice. It stopped right here at 7.86, almost here at 7.86, and it came down. Went back up again to 7.86, and it came down again. It went back up again a third time to the same level, 7.86, and that's when the market actually completely dropped. So this whole time right here, as people were buying and selling, all the market was doing, the market was just consolidating, okay? And that happens when the Fibonacci goes all the way to 78.6. The market likes to consolidate around that area, and then it continues on that trend, okay? So how can the Fibonacci retracement level help you? Well, very simple. You really don't want to have you really don't want to have a lot of lines. You don't want to have a lot of levels on the chart. I like to keep on my chart only key levels and Fibonacci levels, right? Those are the levels that I use. I don't even really use support and resistance more than what I use my key levels, which I already show you on previous videos before. But if you could combine, right? If you could combine levels as Fibonacci levels and key levels at the same time as confluence for you to take a trade, you're gonna have a nice setup. Why? Because a key level always stays in there, right? And this is a perfect example for that, right? So you have this A zone right here and this B zone. Market came down from A to B, so that's pretty much from level 3,300, went all the way down to 3,200, which is also a key level, right? When you see the market go up, that's 0.786. It pretty much is 33.07624. Guess what? That's a key level zone. So the key level is not only the 3,300 zone, but it's also a zone around it. This, for me, I consider a complete key level touch. So you have a couple things here. You have a key level zone touched, which is the 3300. You also have on this server, you also have the Fibonacci at 786, and you also have right here in the, you also have here a beautiful charting on your RSI, and this all being shown in the 1 hour. I'm pretty sure if I go to 4 hour, I'm gonna see it even better. Let me see right here. There you go, right there. 4 hour, you have what I like to call a charting formation. You have a selling formation too. You also have a 786 in the Fibonacci, and you have a key level. This is the perfect setup for a sell. Okay, so the same thing that you see to the upside, you're gonna see it to the same thing you see to the downside, you're gonna see it to the upside. It really doesn't matter. You just gotta know how to place your Fibonacci levels. Make sure if you're in an uptrend and you're looking for a pullback to enter that trade, make sure when you place your Fibonacci, I see a little people making this mistake. If you're going on a trend line, if you're going on a trend that is going up, you want to see when the pullback happens, right? So you want to see when it comes back down to a place that you could buy and then enter. So you're gonna go from bottom to top, point A to point B. Okay, look for that entry zone right here. If you can see a 0.38 and the market just rally up again. The same thing you're gonna see, the same thing you're gonna do when you're going into a downturn, but you're gonna do it backwards. You're gonna go from point A. You're gonna do from point A to point B. I'm gonna see point A to point B, point A to point B, because I'm going to to a downturn is from the top to bottom, point A to point B. Looking for these zones right here. If you could tell, 0.68. I love that zone. Market just drops. Okay. So, anyways, this is the Fibonacci levels. This is how you could work them out. They're actually pretty easy to learn. I'm gonna show you right now my settings on the Fibonacci. You could use the settings that you like. For me, the settings of the Fibonacci, I don't change them. I use the same. Most people don't use 0.559. I love to use it because it's the in between between 0.618 and 0.5. Most people use 0.5, 0.618, 0.786, and 0.38. I love to use 0.559 because it's the in between between those two levels. So you see a wick right here, you see that all the time. So I like to use 0.618 and 0.5 almost as a zone. So that's why I like to put on my chart 0.559. I'm gonna show you right now what my Fibonacci looks like, the settings. So the styles that I have, I mean, you could use colors, you could use whatever you want here. You could color the entire zones, whatever you like. I like to use them like that, as clear as you see them. I only really color the 0.559 and everything else I just leave it in black. But you know, I do change my charts from time to time, and I do use different colors from time to time. So you can use whatever you like, whatever works for you. This works for me. I think it's a great strategy, and I hope you guys like the video. Just do me a favor. If what you're finding in the Matrix Live is interest to you, if you're understanding more how to trade, go ahead and drop me a like. Share this video with somebody else that needs it. Follow our channel in YouTube. Follow our channel in Telegram. I give free trades all the time. You can follow my Telegram group, where not only are you going to learn how to trade, day trade for real, but I'm going to be sending signals for you guys to be able to make money while you guys learn. Also, you can sign up for the broker that I use all the time. This broker has amazing spreads. It's a great broker you could build a business with, and it's a broker that pays. It's gonna be able to give you withdrawals on time whenever you need them. Okay, so guys, this is the last thing I'm gonna say today. Enjoy your weekend, and I'll see you on the next class.